Welcome to Finance Deep Dive. In this video, we're going to pull back the curtain on how banks really make their money.
So, you ever think about what actually happens to your money after you drop it in the bank? I'll give you a hint. It's definitely not just sitting in some dusty old vault.
See, here's the thing you've got to remember. Banks are businesses, and their entire model is designed to make a profit from your cash.
All right, so let's get into their number one moneymaker. It's something called the interest spread.
So, what is that? Well, it's pretty simple, actually. It's just the difference between the interest rate they pay you for your savings and the much higher interest rate they charge other people to borrow that same money. Okay, let's walk through a quick example. Let's say you deposit $1,000 into your savings account. And the bank gives you a nice but kind of small 3% interest on that. But then they turn right around and lend out your $1,000 to someone else for, say, an 8% interest rate. So after a year, what does that look like? You've made $30. Not bad. But the bank? They've made $80 from your money.
That's a clean $50 profit for them just for acting as the middleman.
Okay, but that's not the only way they make money. Next up, we've got fees and charges. You know all those little cuts that add up really, really fast? Oh yeah, you know exactly what I'm talking about. Account maintenance fees, ATM fees, those painful overdraft charges, and of course, credit card late fees. And look, on its own, a single fee might not seem like a big deal, but multiply that by millions and millions of customers, and suddenly it's a gigantic source of income for them.
All right, method number 3 is bank investments. This is where they start making money with money.
They take a portion of all those customer deposits and invest it in things like stocks, securities, and super safe government bonds.
The game is simple, right? They pay you that 3% on your savings, but then they can go and earn, say, 5% on a pretty low-risk government bond. It's another easy profit margin for them. And that brings us to the last one. And folks, this is the real powerhouse of bank profits: credit cards. I mean, just look at this gap. It is absolutely huge. Your savings account might be getting you 3%, but turn around and look at your credit card statement. You could be paying a staggering 20% interest. So let's go back to that $1,000. But this time, imagine it's an unpaid balance on your credit card that you carry for the whole year. With that 20% interest rate, the bank is going to earn around $200 just from that one balance. So what's the big takeaway here? It's that your money is never just sitting still. It is always, always working for the bank. If you are liking the content, don't forget to subscribe. It really motivates us to keep posting. So here's a final thought for you. Now that you know how your money is really being used, what will you do differently?